Nike stock is down 57% in the past 5 years and has massively underperformed the S&P 500. So let's see if this is a good opportunity to buy the company by looking at the fundamentals and running a discounted cash flow model to calculate the intrinsic value of the company and potential future returns. Nike stock has been struggling. The revenue was growing nicely in the past decade as it grew from $32 billion to $51 billion. However, their revenue has dropped in the past couple of years and is now down to $46 billion. Their profit has taken an even bigger hit. Net income has dropped from $6 billion to $2.5 billion, and free cash flow from $6.6 billion to $3.2 billion. Naturally, their margins are also down as gross margin is now at 41%, profit margin has fallen to 5%, and free cash flow margin to 7%. The reason for this drop in profit are tariffs. This is basically a tax on products coming into the US from other countries. And for Nike, this was brutal, because Nike makes almost all of its shoes and apparel overseas, especially in countries like Vietnam, Indonesia, and other Southeast Asia. So when tariffs rise on those countries, Nike's costs rise immediately. It is estimated that tariffs have cost Nike $1.5 billion. Now, I personally believe that this is going to be temporary and will probably last a couple of years. Nike can try to offset tariffs by raising prices, which risks hurting demand, absorb some costs, which will hurt margins, or shift production, which is low and expensive. And the decrease in revenue was due to a change in the way Nike sold products under the previous CEO, as he pushed hard into direct-to-consumer selling through its own stores and websites, instead of through wholesaler partners like big sneaker retailers and specialized running shops. Some other negative aspects are inventory problems and that revenue is decreasing in every part of the world, especially in China. In order to fix this and try to turn things around, Nike has brought back Elliott Hill, who aims to rebuild wholesaler relationships and wants to put sport and athlete back at the center. Analysts are expecting a turnaround, although slow, as they have Nike reaching $47 billion this year and then grow to $58 billion in 2030. As far as profit, they are expecting Nike to make $1.62 per share this year and then grow to $4.73 per share. If you assign a 20 PE to those 2030 earnings, it would make it a $94 stock, meaning 64% returns from current level. As value investors, we need to ask ourselves the following two questions. Number one, is Nike going to be able to turn around? If the answer is yes, has the market overreacted and has this presented the opportunity to buy Nike at a discount? In order to answer this question, I use my Google Sheet. This tells me at what price you should buy a stock based on the assumptions about the future of the company that you put in. I did a 7-year analysis with low, middle, and high assumptions, and the intrinsic value according to my low assumptions is $40 per share, middle $59, and high $83. And because the stock is currently trading around $57 per share, this means that if my low assumptions occur, you would get a 3.7% annual return on your money, middle 10.6%, and high 17.2%. Now, as far as my assumptions, I assume Nike grows revenue between 3.5% and 6.5% over the next 7 years, the average of profit margin and free cash flow margin between 8 and 12%, and I assign the PM price to free cash flow at the end of the 7 years of 16, 18, and 20. But if you want to make your own assumptions, I'm going to leave a link to the spreadsheet down below. It is super simple to use because I've done all the calculations in the background, so you only need to input your assumptions. It is important to note that these returns include the dividend, which currently has a yield of 2.8%. However, if you decide to invest in Nike for the dividend, you have to be very careful because the payout ratio is currently 94%. This is what percentage of their profit is used to pay the dividend. Therefore, if they don't improve their profit fast, they are going to have to cancel the dividend. By the way, if you want a discount on stockanalysis.com, which is where I've shown all the stock data, grab my code in the description. Nike also has a great balance sheet as they have around $8 billion in cash and $11 billion in debt, which is nothing for a company that now has a market cap of $84 billion. Finally, regarding my position, I actually bought Nike when it was at this price, $57 per share, a couple of months ago, and then sold 2 months later because it jumped very fast and I wanted to lock in 20% gains in just a couple of months, and because the valuation got expensive again. I've actually changed a bit my point of view. I still believe Nike is going to turn around, but I believe I need a bigger discount and a bigger margin of safety in order to justify the risk of a turnaround, which is why now I'm interested at $45 per share. And I also believe there are better opportunities in the market such as PayPal. I hope you found this video valuable. Let me know what you think about Nike stock in the comments, and I'll see you in the next one.